What's key to you? Is it the headline number?
Well, not really. What I'm looking at is wages. So I'm expecting to see a 0.3% increase in average hourly earnings, which should bring the three-month moving average around 3.6%.
0.3 is pretty good.
Yeah, no, I mean, wages are starting to rise. It's largely at the lower end. The beleaguered lower two-income quintiles are doing quite well right now. And then I also like to look at aggregate hours worked. That gives you a good forward look at where spending's going to go. And because we had that gigantic decline of 1.9% in retail sales in December, we want to see those hours increase, which will give us a sense that perhaps consumers have rebounded.
So you want to see not only people are making more, but they are working more, which is a double push for the economy, I would have.
That's right. And then what we also want to see is a reversal of some of the horrible numbers we saw inside that report last time.
Specifically what?
People working part-time for economic reasons. It increased by 430,000. Those were your government workers and your contract workers who were driving for Uber or Lyft rather than doing their normal day job. So hopefully that reverses and we get back to what we see as a declining trend in that important gauge.
Is the hangover from the shutdown finally over? No. Or is it still going to infect this number in some way?
No, it's going to impact the number. It'll be next month. And I mean, when you take a look at all the U.S. data right now, it's being impacted by that shutdown. Lots of incomplete information out there, making it difficult for the Fed to say, hey, what do we do here? What they do is they're just on pause until middle of the year.
So if we, you know how the game is played. Yeah. If we get a bad number, you're going to have people say, well, there's still the government shutdown in there. Let's ignore this number. If we get a really good number, then what? What if it's much bigger than expected?
If we get another big number, then people are going to start worried about the Fed moving in June. I think that's sort of the key here, is if we get a second straight blowout number, investors are going to start pricing in more action from the Fed, which could cause a sell-off in the market, especially after what we saw in China overnight and Mario Draghi's performance yesterday.
Joe Brusuelas, RSM, thank you.